of stocks that are in focus are the Inox group stocks. We have Inox Wind and Inox Wind Energy up in trade today. And to talk about the latest development for the INOXGFL group, we're joined by Devansh Jain, who's the executive director at the INOXGFL group. Good afternoon, Devansh.
Good afternoon, Mehika. Good to be back.
Yes. Let me first start congratulating you on the 300 crore equity capital fundraise that the group's privately held renewable energy power generation platform has come out with, which is IGRE Renewables. Now, let me start by asking you, how will the fundraise be utilized and what are the set targets for this subsidiary?
Look, so as a group, we're trying to be at the forefront of the entire energy transition mega play. I think that's one vertical where we are very, very strong at the entire group, be it Inox Wind, Inox Green, our EPC arm, or even our forays in EV and green hydrogen. So I think what was a natural progression for us was to set up an IPP platform for a lot of our captive requirements and also to leverage higher power prices across the C&I platforms and on the power exchanges. And to that extent, we've now consummated that by formally launching IGREL Renewables, which is basically INOXGFL Renewable Energy Limited. We have raised 300 crores. We've pumped in as promoters as well. At this point in time, it's a single-digit dilution. The larger objective being to create a 2 gigawatt platform over the next 2 odd years, which is going to be a mix of wind and solar hybrid so that we can supply maximum power across the group, across C&I players. I think we are well capitalized at this point in time to get to about 600 megawatts, which becomes self-sustaining to get to about a gigawatt over 2 years. We would have another raise sometime next year, which would be on similar lines, maybe a little bit more to take us close to 2 gigawatts. So that's the larger plan. The overall investment would be close to about 12,000 crores, which would be a mix of debt equity. So equity would be about 25%, both primary from the group as well as internal accruals. So that's broadly what we're doing at this point in time.
Devansh, an installed capacity target of 2 gigawatts by FY27. Could you give us more details on what the locked-in capacity is right now? What's the target for FY25 end? And what will be the breakup between solar and wind be as well?
So broadly, we're looking to do about 50-50. So about 1,000 would be wind, 1,000 would be solar. Broadly, what we would like to do is by March to June, we would like to do about 500 megawatts. By next March, so I would say March 26, we would like to exit at upwards of 1 to 1.25 gigawatts. And then by 27, get to about 2 gigawatts. That's the broad plan. We've got about 600 megawatts of PPAs and LOIs in the system. And as we now progress, I think we're in discussions for a lot more. I think we should get to about that 2 gigawatt number very, very comfortably.
In terms of the current locked-in capacity with respect to solar, how much of those orders have been placed?
So we've placed orders for about, I would say, almost finalized or placed orders for about 200 megawatts in solar. And we're looking at placing about 300 more megawatts of solar over the next 30 to 60 days. So we're toying around with capturing a part of that pie as well. So that's the reason why some of it has been delayed. Otherwise, we would have placed 500 megawatts of solar already. But I think in the next 30 to 45 days, we should be almost 500 megawatts of solar orders placed out and awarded in the public domain.
Okay, got it. And the capex plan is 12,000 crores over the next 3 years. How much of it will be infused in FY25? And how do you all plan to fund this capex? Could we see more debt?
Look, again, I mean, this is at the promoter level. So the debt is not in any of the operating entities. As you're well aware, at the group level, we're net cash. Obviously, if you're setting up an IPP platform, it is 75-25. Given the returns are phenomenal for us, we're capturing a larger chunk of the entire energy transition piece. We've decided to keep this at the promoter level and not get any of the operating companies to invest in non-core assets, which is power. As I mentioned too, we are well capitalized for about 600 megawatts of equity. This would automatically fund a gigawatt from internal accruals. And as I mentioned, we would do another raise next year, which would be on similar lines, plus minus slightly more, to get to enough equity to get to 2 gigawatts. I don't think there's tying up equities, whether from the promoters or from third-party investors, is something which is a cause of concern for us. I think at the group level, the group sits on about 12 to 13 billion of market cap. So this is a very, very small chunk. We're letting people ride with us. We want to create more value for the larger ecosystem. and create more value across shareholders. So I think that's what we're looking at doing. On the debt side as well, I think the group is very, very strong financially. We're net cash, as I mentioned to you, at the group level. So frankly speaking, tying up debt for such strong PPA-backed projects is fairly is not rocket science for us at the group level.
Okay, let's also, shift focus and talk about INOXGFL. Now, the order book stands at 3.5 gigawatts, which is a revenue potential of around 21,000 crores, if I'm not wrong, given the average 6 crores per megawatt. Does the execution guidance of 800 megawatts still remain the same? Because you have seen, more order inflows come in for the company.
Look, for this financial year, we are not upping the execution guideline. However, we have mentioned there is potential for the margins to go up beyond what we've guided. While we may not officially do that, I think there's a strong possibility profitability will be stronger than what we've guided. Having said that, for FY26, we have certainly said that there is a very strong chance of higher execution as well as much stronger profit margins. We will officially possibly talk of that as we move forward. But yes, at this level, we are seeing that there is going to be a stronger execution next year and much larger profitability next year. 27, we're clearly gunning for 2 gigawatts. So to that extent, it's still a way, but I think that's a very, very large ramp up. We're very, very strongly placed, I think, in terms of margins, in terms of the order book now, very well diversified, very strong. And as we sit, I think we're still negotiating for multi-gigawatt of orders at this point in time. So I think it's a matter of time we officially upgrade guidances for Inoxwi.
And given the strong demand traction, do you feel the manufacturing capacity is currently sufficient, or are there plans to increase that on that front as well?
Look, we did announce last quarter. I don't know if that was captured well. We are setting up a new manufacturing plant in Gujarat. It's close to our blade and tower plant near Ahmedabad, which goes live over the next 2 to 3 months for nacelles. That would increase our capacity by about 800 to 1,000 megawatt. We're doing that to be closer to supply chains, to sites. Again, we've not done capex in that. We are taking that on lease rent for the next 10 years, where the lease is sub 4 crores a year. So we are being very, very prudent on capex, getting other people to capitalize, do that for us. We're really, we would rather look at more free cash flows. We may announce another plant somewhere in the south as we move forward, given a lot of demand coming in from the south as well. But I think we have sufficient manufacturing capacity, and we are adding to it to capture more as we see the market expanding beyond what we had envisaged.
Okay, so possible expansion in the south given the traction. And I want to end with asking, now the company did secure a license for the 4 megawatt wind turbine platform. The commercial launches by FY26, but could you give us more details and updates regarding the same, and in terms of revenue potential as well?
Look, I think currently we're fully focused on a 3.3 megawatt platform. As you know, in 2 quarters, we completely transitioned from 2 to 3, which is probably the fastest transition we've seen. We are, in terms of supplies this year, about 95% of our supplies this year would be on our 3 megawatt platform. Yes, our 4X is progressing well. That's something which we will launch next year. A lot of our customers understand that the cost of energy of the 4X is far better than the 3. So they are more than happy to gravitate and move towards our 4X supply chain as we get there. There's no pressure on us. We're doing that in a very organized manner. We are ramping up beautifully. I think we have molds coming in every 1 or 2 months. I think, but next year, I would estimate that almost 40% of supplies next year would be about our 4X platform. But, again, I think our 3X is very competitive. 4 obviously is more competitive. But, we have the flexibility and the freedom to play with our customers as we launch better products.
Thank you so much, Devansh, for giving us that insight and, telling the viewers about the possible shift in your order book as well in terms of the new wind turbine generators coming in. And we wish you all the best going forward.